Hello everyone, welcome back to my channel. When you enter any market, then you may not know about the signal indicators, candlestick reversal patterns, price reversal patterns. But there are three things you know for sure, that is resistance, support and trend lines. And trend line is one of the main reasons causing new traders to lose money. It's a scam. So why do I say it's a scam? To be honest with you, I was also fooled, also lost many times because of trendline when new to trading, and now I will share it with you. How to avoid such scams. This is the British pound US dollar currency pair on the 4-hour time frame. We can draw a trend line like this. Trend line defined is a straight line. Connect the tops together and the bottoms together. When price touches trend line, then react. Then we usually expect a sell order. When price breaks through trend line in this case, then we expect the trend has turned into an uptrend, and we enter a buy order. And now we will see how the market goes. The price has broken through the trend line. Usually new traders will enter a buy order here, stop loss below here. Set risk-reward ratio to 1:2. Oh. The price continued to go down, creating a new bottom, lower than old bottom. At this point we will usually redraw another trend line. We will draw the trend line like this, and we will consider it a trend. This line is a trend line. Market data is insufficient, and this trend line is a false trend line, and this trend line is the correct trend line. We continue. The same formula as before. Price touches trend line. Then we sell. Breakthrough trend line we buy. This is a top. And by trend line definition is a straight line connecting the vertices together as much as possible. I can reconnect like this. We fix the trend line again. Here peak to peak. This place is a little extra, but that's okay. And this trend line seems to be the correct trend line. Let's see. Yes. Price broke through trend line. This is likely an uptrend. So we enter a buy order here. Stop loss below this risk-reward ratio is 1:2. Price drop again. Create a lower bottom than the previous bottom. So this trend line seems to be an incorrect trend line. Price is still down. We can redraw a trend line like this. We continue. The price broke through the trend line again. Oh, this uptrend. We enter a buy order here, stop loss below here. Then risk reward is 1:2. Let's see. Price continues to make lower bottoms. At this time, we continue to draw a trend line, new like this, and we look at the trend line again, is the correct trend line, and see how the price goes. Then the price plummeted. Just a quick look here and I can draw it myself. Calculate the trend line here too. Will be about 4 trend lines. And we get 3 commands like this. Then we lose all 3 of these orders. So why is that? Is this a scam? The first. We should not consider trend line as a straight line. Consider a trend line as a price zone. Second thing, we should not trade according to trend line. But we should only consider the trend line is a support for us. So we can look at price trends. So why break the trend line? But The trend is still not an uptrend, but still a downtrend. Let's go back to the basic definition first. The market only moves in three main trends: uptrend, downtrend, and sideways. In this case it is a downtrend. Downtrend. Defined. Price will have to continuously make new peaks. Lower than previous peak, the back bottom is lower than the front bottom. So when will it uptrend? When can we buy when the trend is up? We enter buy order. Trend will be uptrend. Uptrend when price makes a new peak higher than the old peak. This is an old peak. Create a new peak higher than the old peak. The price rebounded to create a new bottom higher than the old bottom. This is the old bottom. Then we can expect the trend to be uptrend. Our uptrend into a buy order here. Set stop loss below. Now we expect this to be the trend. Uptrend, and we enter buy order. So back to this example. This is a peak. Has price broken here yet? Price hasn't broken here yet. So, while like the previous case we enter an order into a buy. This is the next peak. Continue. You can see this is a double top pattern. Signal that the downtrend is continuing. On the market, the sellers still dominate the market at the moment. Price cannot break through this peak. The appearance of the engulfing candlestick pattern. We can enter a sell order here. Risk reward is 1-2. Price has not broken through the level, then we cannot expect one uptrend. Continue to return to retest this peak. You guys just look like that. Price keeps coming back to the top and reacting. Form reversal candlestick patterns. Price reversal patterns. Like this, then we just enter a sell order. It keeps retesting. With a candle, super engulfing candle here, we enter another sell order here. Keep coming back, but still cannot break through this peak. Then why did we enter a buy order like just now? Price keeps returning to key level. Retest this price range, then go down like this. Then just enter a sell order here. Why do we buy? When the price has not broken through the level, form an uptrend. You can see this price return to key level. Form a double top pattern here. Price goes down. Retest again, forming a double top pattern here. And it will keep going like that. The price will keep going down and down. So, in which case do we enter a buy order? When? Let's say we are looking for a buy order. In this case, then the price must increase here to break through this peak. Keep returning. Retest same price, retest candles appear. Reversal candlestick pattern appears. Price reversal pattern. Then we can expect a buy order here. Stop loss below. Take profit up here. You just remember, you will avoid being scammed of trend lines. For me, I don't like trend line. I just draw a line like this. Remind me to look for a sell order rather than looking for a buy order. Because I have looked at a lot of charts and read a lot of books and realized that the market does not remember diagonals, but it only remembers the prices it has reacted to before. Like here. Price has reacted on it here. Go back to retest again. Retests keep retesting and the price goes down. But the market is difficult, not like the trend line. Trend line is just our subjective opinion. You can test it with your friends. In the same chart and two people draw the trend line. Then high probability is trend line of two people will be different. So which trend line is the correct trend line? There is really no true trend line. Trend line, just something that supports us to trade. But it is not that. Decide we enter the order. As in this case, trend line is just a reminder to myself. I am looking for a sell order. Price breaks through trend line. Then it is not necessarily an uptrend. Uptrend, when price makes a new high higher than the previous high, and the new bottom is higher than the old bottom, then that is the uptrend. So we can enter a buy order. Please remember, to this theory, price breaks through trend line. Not an offer to buy or sell. New high price is a buy and sell signal here. Thank you. Good luck trading. No loss and avoid being scammed by trend line.